A storm takes half the roof. Water follows it into the house. 6 weeks later, an envelope arrives thinner than you expected. Your insurer has finished its investigation. At the bottom of the letter, a number. We've covered it up because that number is the whole story. 2 pages, 4 clauses, 1 family's balance sheet. This is a case file about who pays when the insurance you paid for says no. Open the file. 1 case file. A composite built from thousands of real files, so no family has to relive theirs. It's a US file. The clauses inside it travel. The house, a 2-story, roughly 30 years old. The event, a wind-driven rainstorm. The damage, roof torn open, water through 2 floors. Repair estimate, $38,000. The homeowner reported the loss, let the adjuster in, signed the forms. Then came a first letter, a reservation of rights. That's the insurer saying, we're looking and we might still say no. 4 in 10. In the US, that's roughly how many home claims now close without a dollar paid, up from about 1 in 4 a generation ago. One honest caveat, closed with 0 is not the same as wrongly denied. Some of those files never qualified, we'll come back to that. But first, the letter itself under the light. This is a denial letter autopsy. Every clause is a lever. Put the pages on the light table, and the first one glows. Clause 1, wear and tear. Insurance covers sudden accidental damage, not slow damage. An aging roof, a leak that dripped for months, maintenance you skipped. And this letter pulls the lever. The roof, it says, was worn beyond its serviceable life. The storm didn't kill it, time did. Roof portion of the claim, nothing. Who decided? The insurer's inspector. No photos from before the loss. So the insurer writes the history. Clause 2 glows next, one most homeowners have never heard of. Here, wind opened the roof and water did the damage. Some policies say, if a covered cause and an excluded cause combine, the insurer can deny the whole loss. Wind damage is a glass of clean water, covered. Flood rising water from outside is 1 drop of poison. Many home policies sell that cover separately, so here it's excluded. 1 drop poisons the entire glass. This letter pulls it too. The storm didn't just pour through the roof. It also pooled on the ground and forced its way in, so the water in the walls mixed with excluded surface water. Water portion, nothing. And the number under the black bar just got smaller. Clause 3 is the quiet one, deadlines. Policies demand prompt notice. Report too late, and delay itself becomes the denial reason. The damage got worse on your watch, they'll argue. Then comes the sworn proof of loss. Sworn homework, signed under penalty, in many policies due around 60 days after it's requested. Miss that fuse without a written extension, and a valid claim dies of paperwork. Our homeowner made the deadline. Barely. This lever stayed cocked, it never fired. The letter didn't need it. What's left is a small covered slice. Interior fittings the letter couldn't exclude. Watch a check get torn in 2. Money a policy owes can shrink twice before it reaches you. Shrink 1 underinsurance. Insure the house for less than its rebuild cost, and many policies cut every claim by the same proportion. This house was insured for about 60% of its rebuild cost, so its covered slice becomes 60%. That underinsurance math travels. UK, Germany, same formula. Australia just gives you a buffer first. Shrink 2 in US-style claims. The first check often pays for what you lost as old, used material. Minus your deductible, a check torn in 2, the second half locked until you've actually rebuilt. Underneath it all sits the number nobody sees being made, the estimate. Large insurers typically price your loss with estimating software. In one documented US dispute, a different house, a far bigger loss. The same software produced two answers for the same home. The insurer's estimate, around $172,000. The policyholders, above $374,000. Same walls. Same water. Different settings. In this file, the software priced the covered slice low. And after the haircut, what was left slid under the deductible. The share you agreed to pay yourself before insurance owes anything. Below that line, the insurer owes nothing. No check to tear. The number had a dial. Remember the covered number at the bottom of the letter. Software like this is where it was typed. Walk back to the house. While the clauses worked, the house kept its own running bill. The mortgage did not pause. The payment arrives every month, unless the lender agrees otherwise. Hotel meal storage. The policy only reimburses those for a covered loss. Denied claim. Every receipt lands on the family. And the damage is on a clock. Wet materials dried within about 2 days usually avoid mold. Past that, a $4,000 dryout can grow into a 5-figure remediation. Every day of unrepaired damage writes itself into the house's history, a file the next buyer will read. Denial doesn't just refuse money. It buys time against you. Then a second letter arrives from the bank. Denials often travel with a second blow. At renewal, the insurer drops the house, or the premium jumps and the policy lapses. And a mortgaged home is not allowed to be uninsured. In the U.S., the bank can then buy a policy for you and send you the bill. Force-placed insurance. Several times a normal premium, consumer advocates report up to 10 times, and it mostly protects the bank, not you. Lenders everywhere guard their collateral the same way. And for a typical U.S. homeowner, nearly half of everything they own sits in that house. And the letter's redacted line hasn't paid a cent of any of this. So is someone twirling a mustache? Mostly no. Follow the money. In a recent stress period, U.S. home insurers paid out more than $1.10 for every dollar of premium taken in. And above the insurers sits their own insurer, reinsurance, whose prices jumped sharply. When claims outrun premiums, there are two fast levers: raise the price or tighten the payout. A law professor who studied U.S. claims handling named the tightening: delay, deny, defend. After one hurricane, a field engineer found almost all his damage reports rewritten before homeowners ever saw them. The project manager pled guilty, and a jury found an insurer had classified wind damage as flood damage. The settlement details are on screen. Not every letter hides a scandal, but the incentive is built into the pipe. The machine quietly relies on this. Most people read the letter and stop. Don't. A denial is an opening position, not a verdict. Move 1, force them to name the exact clause in writing, then answer with evidence. Photos, receipts, your own contractor's estimate. Move 2, escalate for free. Every country in this file has a free referee, a regulator, or an ombudsman. In the UK, roughly 4 in 10 home complaints are upheld. But start move 1 early. Because, especially in the US, policies can require you to sue within 1 or 2 years of the loss. And that fuse burns while you're being polite. Now the part a fair investigator says out loud. Not every zero is a crime. Remember the 4 in 10 files closed without payment. Many are real damage that's simply smaller than the deductible you agreed to carry. Many are perils the policy never covered, never bought. Flood is the classic, a separate contract in many markets, and in Germany, nearly half of homes carry no natural hazard cover at all. When that water rises, the denial letter is the contract doing exactly what it said. So which kind of zero sits under the black bar in our file? An honest one, or a built one? Time to open it. Not an honest zero, I built one. In this file, 3 levers fired. Wear and tear took the roof. 1 poison drop took the water. The surviving slice was shaved by the underinsurance haircut and a software setting until it slid under the deductible. And 1 lever that nearly fired, a deadline survived by days. Amount payable: $0 against a $38,000 loss. Now the ledger who pays. The homeowner, the repair stack, and a mortgage on a broken house, plus everything the meters counted. The lender protects its collateral, then bills it straight back. Every policyholder, the insurer's own insurance got sharply more expensive. It folds into everyone's future premiums, including yours. And the next buyer, unrepaired damage gets disclosed or discounted. Often by law, it never just disappears. That 0 was never one decision, it was levers. And almost every lever had a counter lever. Case closed. Before any storm, read the renewal, not just the price. Check the roof terms and deductibles, and ensure the rebuild cost, not the market price. Keep before photos and receipts. And if the letter ever comes, demand the clause, answer with evidence, use the free second act. This file is one case in a series about who really pays when cover lapses, when systems fail, when the fine print wakes up. Which case should we open next? Tell us in the comments. The most asked case wins. And if files like this are worth your time, subscribe. The archive is open.